hopping on right now. It's crazy, how many people are on this call, and keep sending the link out, keep spamming everybody, tell them to hop on. This is the one meeting that they just don't want to miss. Out of probably every meeting, every training, every event that we've ever done, this is going to be one of our best, and I'm super excited to be opening up here for you guys today. I know you guys are tuning in from all over the world. Drop the city that you're representing tonight on the chat, guys. You're going to see how many people are in here from just every which way, and you're going to see that everybody from all over the world wants the same thing. Everybody wants more freedom, everybody wants more time, everybody wants to experience more life, everybody wants to know how to pew in the markets, how to get these sniper entries, and we're going to show you all of that today, guys. And I'm super excited to bring up one of our first speakers today. So here with you today we have the co-founders of multiple different trade houses. From TradeHouse Canada, you have TradeHouse Australia, you have TradeHouse Europe in the house, and we've prepared a lot of really amazing nuggets for you guys today. So have 2 notebooks ready. We're gonna get started. We're gonna kick this off, and I'm gonna bring up our first speaker. Now, this person is somebody who is literally the backbone to the entire TradeHouse infrastructure. Without him, none of this exists. And I'm so honored to have been working with him for the last 4 years and to have learned so much from this individual. I literally call him my sensei, because he's like the senior trader in the trade house, the guy that has the most experience, the guy that's been mentored personally by millionaires for so long, and he's got so much knowledge just ready to share with all of you guys today. So let's go ahead and bring up the one, the only, Mr. Zachary Hogan.
What's up, what's up, what's up? Definitely appreciate you, brother.
Appreciate you.
And just give you back some love, man. It's been such an incredible journey, Vargas. And as you already know, without the collective effort of all of us, we wouldn't be here today. So definitely appreciate you. It's been such an honor being able to learn about so many different things, not just related to the markets, but about life alongside you. For today, for everybody that is here on this call, tuning in live, definitely appreciate your time hopping onto this session with us. I want to just go ahead here real quick and make sure that we are good to go. There we go. Had to mute you, Siva. But there's really 3 things that I want to talk to everybody about today, and we're going to be using the charts to really help illustrate this picture that I want to share with you. And so my goal within the time that I have is to help you understand 3 truths that I've learned about the markets during my time that I've been a participant. For those of you that don't know much about me, or if this is your first time hearing me speak, I started trading back in August of 2014. It's been a phenomenal journey. And this is something that has allowed me to elevate my level of understanding about myself more than anything. So price, time, and you. These are 3 concepts, 3 components that are extremely intimate when it comes to understanding how to be a market participant. And the 3 truths that we're going to be discussing today are all related to price, time, and you. Now, wouldn't it be powerful if you felt confident in your ability to identify opportunity, whether the markets were rising or falling? We understand that trading in the markets with real money, it does involve risk. We're not financial advisors. The information that we're going to be covering today, it is for educational purposes only. It's a Saturday. You could be anywhere doing almost anything, but you're here. What I would encourage you to do to make the most out of your time, set aside your distractions, be open-minded, and realize that these markets and the various things that we are going to be discussing, you may agree with them, you may not. If you're brand new and you don't even know what to do yet when it comes to market speculation and taking entries, finding exits, all of that stuff that's involved with actually taking trades, this is still going to be beneficial for you. And realize as we move forward throughout the lineup of amazing educators that we have here with us today, we all look at the markets in the same kind of way, but through different eyes. And if you can have a breakthrough from the information that I share or that some of the other educators will be sharing, that's really the entire intention of why we are here. So going back to that question, wouldn't it be powerful if you felt confident in your ability to identify opportunity, whether the markets were rising or falling? It's possible, but you need to have an understanding about price, time, and you, who you are as an individual, who you are as a market speculator. There are so many different indicators out there. Even if we were just to click the indicators tab over here on TradingView, we've got ones that are built in and a list that seems almost endless. We've got a public library of different things that people have programmed and made available. We've got millions of different strategies and techniques when it comes to looking at a chart and understanding when it could be a good time to get in or when it could be a good time to get out of the market. And we get millions of people all looking at this same chart right now. We've got USD CAD up on the screen, daily time frame. And we could all be looking at the same thing, but get a million different outcomes. And why is that? Why is it that when we're looking at a chart, we could have the same trade idea, we could be looking for the same thing, but arrive at a different outcome? Some people would blame the broker. And the reason why they would blame the broker is because of the slippage, spreads. Some brokers don't make every asset available to trade. Some people may blame market manipulation and feel as if the market makers are out to get you. But it really comes down to you. The biggest variable in all of this is you. And we're going to take a look at two different ideas that have already happened and talk about one possible future scenario to really help illustrate this picture and help you realize that first and foremost, price, it can tell you all that you need to know. No matter what chart you're looking at, whether it's a Forex currency pair, whether it's a stock, whether it's an index, whether it's a commodity, whether it's a digital currency, price can tell you all that you need to know if you give yourself permission to get in tune with the candlesticks. The second thing is that there are millions of different scenarios that could happen. All of them, of course, take time to develop. And then thirdly, you are the sole individual that is responsible for the outcome. Whether you win, whether you lose, you are the only person that is responsible for your results. Now, with that being said, the first idea that we're going to be taking a look at here was sent out for consideration on April 14th through the Bounce Back Sniper app. This was a buy idea on USD CAD. It was sent out about 262 hours ago for you to go and do analysis with, and we can see that here by the blue arrow. So we'll keep that in mind. We're going to go into replay mode just to give us a better understanding of how this trade idea played out, the different things that we were looking for, the different things that I was considering when I was looking at this trade. And the first thing here that we need to make note of and that we need to consider is the higher time frames. You'll have a very difficult time finding low risk, high probability setups if you are focused on a minute chart or a 5-minute chart, even a 15-minute chart, the hourly chart. These smaller time frames can get really noisy. And while they can be valuable to help you identify gaps in price, imbalances in the market, things that to the untrained eye, you may not be able to see when we're looking at something like the daily. We could all agree that the gap right here is extremely visible. Very clear imbalance. We had price gap up over the weekend. And that movement right there was just over 125 pips. We can all see that very easily. The untrained eye may not realize that we had a gap in here. And some of you may not see the one in here, back from April 13th. So it's been about 2 weeks since this idea started to play out. Price was around the 139 level. We had that gap, something worth taking into consideration. And bringing us down now, we are going to just move into the hourly chart. We could see that up until this point, we had what many people around the world would have been identifying as a support level. Right, price bouncing 1, 2, 3, 4 times. Some people may even consider this as a 5th time because they have a zone rather than a specific price level. We can also see that there was this gap, and that's something worth noting. Okay, these gaps in the market, they are magnetic. More often than not, we're going to see price be attracted towards these areas, and they can act as key turning points in the market. So let's fast forward to where that trade idea was originally sent out, right in here. Okay, April 14th, this blue arrow right here. We were looking at this price data. So that's what we have here in front of us right now. The thought process was look for buying opportunities because of the gap, because we could see some very clear targets at higher prices, and because what we saw in this moment, once that support, that price level that kept seeing the market bounce again and again and again, once it was broken and we got this fast move down, notice what happened right here. We had an imbalance created. And if you don't understand what imbalance is as this session moves forward, you'll have a better idea. But it's basically when there is a lot of buying or a lot of selling coming into the market all at the same time. So we may see those as visible imbalances, such as this gap right here, or we may see it through big candlesticks, such as this 52 pip candle right here. So the market trades down. It takes a lot of force and a lot of strength to break through that level. And it's not until here that we start to see some signs of strength in the market. So my thought process was, let's focus on these two candlesticks. Okay, let's focus on this last bearish candle right here, and then the one that engulfed it. And when you take a look at these two, we can all agree that this entire bullish candlestick here engulfed the one previously. It was about a 40 pip move, and we traded right back up to that 139 level. During Asian session, a slow time of the day, we saw the market retrace. We traded into there again, and we saw evidence, proof in the market that there was still willing buying participants. We saw more strength, and the structure confirmed that by giving us a higher high. Right, here's that first high. We get a higher high when we look at the bodies of where those candlesticks closed. Here is that initial low. We had a higher low. When we were on the bounce back session for New York Open on April 14th, the candlestick that was in the process of printing was this bearish candle. And you can watch the recording, you can watch the analysis in real time and the thought process that went into why we were looking to buy in that moment, because of course now this is hindsight. But we wanted to see and give an attempt because the timing was right. We were in a volatile time of the day. New York market open generally will present some nice opportunities for us. So we wanted to give an attempt. We wanted to buy, and the entry price that I was looking at was 138.73. The area that I was considering for a stop was about 20 pips. It was just below this past structure at 138.53. Now the thought process, again, we saw our high, higher high, our low, higher low. If this scenario is going to be valid, we don't need to be risking an insane amount of pips. We can just look at this past low as a point where if the market gets beyond there, be cautious. Look to be getting out of your position because we have invalidated the structure. The evidence that we'd want to see, a higher high. Candlestick body closes beyond this past high. So what do we see? The market trades up. We make relatively equal highs. There's lots of wicks. The candlestick bodies open and close around the same price line. Some more time passes. The market gave one more attempt near that potential entry area. And then finally, as we headed into the London session on April 15th, we began the expansion towards that first target at 139.4, which is literally in the middle of this imbalance. So we had a nice expansion happen. And if we were to look at the reward to risk in that instance, you're talking about around a 3-to-1 scenario when we factor in all of the variables like spread, different entry prices, and different pricing that your broker may be giving you. And it's at this point, you as the trader can go break even. You can do a million different things. But as this was happening, and as we were seeing the expansion, you might have noticed we still had another target. And so what we saw was just clear evidence that there was strength and that this area was valid. We saw a huge expansion where the market moved just over 200 pips in the span of 8 hours. From London session to New York Open, the market ran away from our area, and this is the type of setup that I personally like to take. The market didn't stick around near my entry area for that much time. We were only here for about a day. But these trade ideas, they do take time to develop. You can't expect that once you enter the market, within the same minute, price is going to go 20, 30, 40, 50 pips in your direction. You need to allow time to pass. And eventually, enough new data and enough new information will move within the market. And it will get to a point where you can then feel confident in flipping your bias to look at the other direction and go back to that same question of, wouldn't it be powerful if you felt confident in your ability to identify opportunity, whether the markets were rising or falling? So many people only believe that you can make money when the markets are rising. That's the norm. If you think about society and if you think about all the different people around the world that have been given this misinformation about the markets and the nature of what it is that we're doing. The other trade idea that we're discussing right now was this USD CAD sell around 142.1. This was sent out about 65 hours ago, April 22nd. So we do need a little bit more data here on the screen to bring us up to speed with where that is. And you may have noticed, even with this buy idea, we did have a continuation. We traded into an imbalance right there. Now the sell idea, we're not going to go super in depth into this. Okay, but essentially we were looking between 142, that whole level. There's a lot of significance and a lot of power when you consider whole numbers and the psychological influence that they have on market participants. Our stop was just beyond a high point right here, and we gave ourselves about a 10 pip entry window. Now you may have noticed from the time that it got sent out at this red arrow to what actually happened, the trade did not fill. Okay, it missed by about 2 pips. And you can see that even more precisely if we drop this down into a smaller time frame. Here was our focus point. Why was that our focus point? Let's take a look at it. We had an imbalance. Similar to that past scenario we just looked at, we also had these lows, okay, that were broken as we headed into the London session. And then by the time that we arrived at New York, this is what we are looking at. So the expectation was watch for price to give us one last movement back up towards 142, that past structure where we saw one of my favorite patterns play out in the market. And so what we got when we were looking at that area as our focus, we had price show us that there was weakness. We saw the continuation down. We had a clear imbalance right there. And while the market did eventually turn around and started moving towards where we wanted to get in, this is one of those instances where you as a trader, if you believe that this is a valid area to pull the trigger, you could have got in. If you're familiar with quarter levels theory, and you've studied the significance and the influence that these whole numbers like 142, 142.50, 143 have on human psychology, the way that you would have went about this for your entry would be different. Okay, for me, I was looking at 142. As we know, it did not fill. But look at what happened when we traded towards that area. Similar to the buy, if this is going to be a valid area for entry, we want to see immediate evidence, proof that there is money getting behind the move. And we get that. We get a nice big bearish engulfing candlestick. Some more time passes, we come back up, we get one more attempt. And then again, as soon as we trade into there, evidence that the market is going to be moving lower potentially. We can shift our focus because there are new targets available, such as these lows. And then when we're looking at the actual structure and how it forms, that notion of learning how to read the candles, we have our high, whether you're looking here, whether you're looking here. So what do you want to see? You want to see the market breaking down, making a lower low, taking out this low, moving towards liquidity. And so what we get is we get one last lower high, and then boom, the market moves down. We get that structure break, and it's even generous and gives one more possibility for entry, coming back up, filling in this imbalance. And then what do we see? Heading into New York session, the market breaks. We take out the liquidity here. And then similar to what we saw over here on that buy scenario, the market just continued falling and falling and falling right down to that 1.4 hold level into a imbalance. And again, if your eye can't see it, what you can do is you can look at the open and the closes of the candlestick bodies. And you'll be able to just see by those actual price points what was happening to create that gap. You can see how big the gap is. All that information is available. And this confirms that first truth that I was sharing with you, that price can tell you all that you need to know when it comes to looking for opportunity in the market. And that throughout this buy idea and this sell idea, that's just two of many scenarios. Millions of people around the world could have found reason to be selling in here, buying in here, even buying in here. It all depends on the individual. It all depends on their perception and your understanding of the market. And then that confirms the third truth, that you are the one that's responsible for your results. Some of you may have been looking at this Friday right before the market closed and you decided to press the button and you sold. Some of you may have been looking at this Friday morning and you decided to press the button and you bought it and you held it into the weekend. We don't know what's going to happen come Sunday. We don't know if the market's going to gap. We don't know if the market's going to give us an open relatively right around where it closed. We don't know. We don't know that. But what we do know is that if we can look left and identify what's already happened and make note of key targets similar to what we were doing at higher levels. And if we can find imbalances and points of interest that would make sense for price to eventually be moving towards, what we can do then to make the most out of our time when the markets are closed is we can identify areas of interest and we can find specific price levels that if and when the market trades to it, once we're open after this weekend, because we've already put in the time to planning out targets and looking for possible areas that the price should not go beyond due to the structure of the market, that eliminates a lot of the guesswork and it sets us up for that confidence in your ability to identify a potential setup, whether the markets are rising or whether you determine that the probabilities of price falling would be higher. Just know, as you move through your trading journey, there are going to be lots of ups and downs. There are going to be lots of times where you find a setup and you feel great about it. Other times you find a setup and you don't feel so great about it. This is a game of probabilities. It's something that's going to test you. And the biggest thing that I've learned in my time that I have been interacting with the market environment, it hasn't even been about the markets or the money. It's actually been about me and about my beliefs and about my understanding of who I am as a spiritual being having a human experience, and I wouldn't trade it for anything in the world. With that being said, I want to go ahead and pass the floor over to our next educator. This individual, I've known him for my entire trading journey. He was one of the first people that I had the opportunity to get connected with back when I started. And throughout these last few years, he's shown so much dedication, such an incredible level of commitment to his growth and his development. And he's really helped me understand a lot about the market mechanics. And I got so much appreciation and love for you, brother. So what I'm going to do is I'm going to pass the floor over to you, Mr. Rock Coomer.
Thank you, brother. I love you. We have been through a lot in this few years. Definitely appreciate you. So guys, I hope you already have tons of nuggets and tons of breakthroughs just from what Zach showed you guys. And what we're gonna go over is a little bit similar, right? A little bit more into next phase or next level of all that. But before we're going to go into this, it's really crucial for you guys to understand that there are three types of people that are, let's say in quote, attacking the market. And when I'm saying attacking the markets, we all come to trade forex in idea to make certain gains, certain financial goals, so we can provide for our families, etc., etc. Right? The only concept that a lot of people get wrong is the time period, how fast something can be done, right? And because of that concept, or because of that mindset, I do think that there are three types of people in the marketplace, and we can call them different types of traders. But what I'm going to do, like the first group, right, is the group that is every single one of us at the beginning, right? The beginner, right? Now, if you don't have a solid system, just like I didn't have at the beginning, right? Where you start? You start at Google, you start at YouTube, you start at babypips.com, and you learn a few stuff that is entire for free, that is giving you some type of ideas what the market should be doing, how the market should be reacting, and all that. Now, problem is that 96% of those people are coming into the marketplace with idea that they could come in, throw XYZ amount into the broker account, and they're gonna flip that to whatever amount they need, right? And they think that that financial burden that they have is gonna be gone, which is not true, because we have been raised in a society that has shown us time and time again that, let's say in quote, money is really what we need to chase the entire life, which is not true, right? So because of that, I think that a lot of people are preconditioned when they are coming to the marketplace that they want to win big and win fast, and everything is going to be okay right next to that, right? And because of that, they have unrealistic expectations when we are talking about time, how fast something can be achieved. And because of that, 96%, the beginners are going to lose money because they are not going to have a strict risk to reward management. They are going to be looking to get in at a worse position. FOMO, fear of missing out, is going to kick in. Basically, the entire emotions are dictating that group decision of what they want to do in the marketplace, right? So then we go into a second group, are the people that, let's say, pass the test and show that they are determined and a little bit more disciplined. Now, those are the guys that are in the marketplace for, let's say, a few months, and they really want to get stuff done and see the profits and consistency in the marketplace, but they are struggling. Right now, reason for that is because you have to understand that market is manipulated in a certain way. Now, when you start to, let's say, discover that manipulation, there is a mindset that you can catch really easy, is like going against the banks, right? Why they are manipulating price in a certain way. Now I'm going to be better than banks. I want to outsmart the banks. That's not how you're going to win. Not consistently, right? Not consistently. Reason for that is because they are going to lure you in again in the worst position, and you're not going to find the consistency there. Okay. So then we come to the third group, which is the last group of people, right? And there are a small percentage of the people that are actually in this group is the people that really understand how the market is manipulated, why the market is manipulated in certain areas, where are big institutions getting in the marketplace, right? Why in that level, what that level really represents to the entire market, right? And those people are people that are not trade just by their emotion, right? They are gathering out data in the marketplace where they can get the best opportunity and where they can see a really good proof that banks did do in that level something, right? And that's what we want to show you guys over here, is that when you know, or not know, when you understand what the banks are doing and how the banks are actually moving the marketplace, is then easy to follow the money. That's literally what we're doing, right? We are following the money with big institutions because they are moving the marketplace. And if we just look on this chart about NZD/USD, right, we have a less bullish candlestick to the up, right? It's really small volume in terms of body, and then we have a really large candlestick, which a lot of people are saying engulfing, right? Which it eternally is. But what really represent is the aftermath of what the banks are really doing, right? Aftermath of what the banks did in previous candlestick. Now, why I'm saying this is because the banks are not buying contracts for a direction that is market already moving. They have a certain place, and you already know that if the market is manipulated, the banks are usually entering and at the highs because they are forming highs, and at the lows because they are forming lows, right? And they can do that in really specific concepts, right? So when we talk about the last candlestick that you can see over here that is bullish, right, it really visually represent the concept that in that candlestick something has to happen, right? Something did happen with institutionals because this candlestick over here did not print it by the fact that banks went in and then sell off. They were selling way before because they have conditioned the market so they have the best entry in this candlestick. So let's just follow the money. So we have this candlestick over here that we now know by the thing that I just said, is we have a candlestick that represent a buying from institutions, right? Large institution. So we have a lot of orders for a bullish environment because this is the aftermath, right? And now we have a lot of orders that are giving us an idea that this could be a lot of orders for going lower because this is now the aftermath of that. So what I'm usually doing is I'm bringing up two levels that are important for me. And it's really easy to grasp, but is literally I'm putting a level on the start of the daily candlestick. Okay, so we're gonna go and name this as a buy daily candle, right? Okay, and we're gonna say this one as a sell daily candlestick, all right? And then now we're gonna have two levels to watch. All right, so now we determined, now we have two proofs that banks, large institutions came into the marketplace and did its thing. All right, we have this one over here and we have this one over here. So we have a range between right here, 171 pip. Right now, what we generally want to do, because we see a hard high over here, right? We have a higher high, so we are expecting, if we are in uptrend, we are expecting a higher low, right? That's how the trend is forming. Now, if we would be a smart money or let's say large institutions, right? What we do? Well, if we have a capability to really manipulate the marketplace and really print the candlestick just like we want to, in my opinion, we should be coming back down to this candlestick, right? Now, reason for that is because that will literally give us time to invest more money in the same area to have more money or better entry or more entry, if you will, to then drive price higher, right? So we have to come back down. So we can see that this candlestick did not came all the way back down, but what if the market needs more selling pressure to come back down here? This is how we get an opportunity, because the market can easily come back up to this area and get more orders in, more contracts in for driving price lower, right? So we have a potential of 172, 75 pips. All right, let's call it just set 170, right, to our disposal, right? So what we do, well, then we anticipate if the market is gonna willing to come back up in the next few days, because this is the daily chart, for us to give us an entry and drive price lower. Okay, so now let's go if we can be more precise in this daily candlestick, because if we would trade from the daily, the trade idea would look like this, right? We would put stop on the high, so we would have a 42 pip of stop loss, and potential to the downside to our target is 1 to 4, which is really good risk to reward trade. Don't get me wrong, right? So with that idea in our mind, can we get a little bit bigger or better risk to reward trade, right? If we play this in again, right? If we play that in future, you can see that market did came back up. It did not came back down to our level just yet, right? Just yet. So there is still opportunity for us to see if there is going to be any chance for us to get in. And you can see that the next day, that's exactly what happened, right? And then the market hit our take profit. All right, so now we are here. Okay, so if I go back to the replay and move it right over here, now let's drop down to the 4-hour time frame. We already see, right, that the market was selling off from this candlestick, because we literally take this high out, we take this high out, and look at the bearishness coming in. So something is happening over here. Okay, we have that daily candlestick over here. And now you can see that we have a 4-hour candlestick that already touched this 4-hour candlestick. So in these two candlesticks, big banks, big institutions already invested a lot of money to drive price lower. Okay, and what it did, well, the market can't just do a reversal in one take, right? There is really rare examples of that. Reason for that is because if we have $1 trillion market over here, you have to understand that institutions, large banks, does control this marketplace in a way that they are putting money in the place that they want to drive price. Now, you have to understand, if we have, let's say, a $2 trillion ready to invest for moving NZD USD, which is Kiwi, to the downside, how are we going to do that? Well, we can't just drop in any level those $2 trillion. It cannot be done. Reason for that is because the market in that environment would literally just drop. We're going to have a flash crash because we are going to overpower the marketplace with our short contracts. So we have to deal that a little bit more in a unique way. So this is how the market is doing, right? We have a first entry in this candlestick over here. Of course, the market did bought a lot of short contracts in this candlestick over here, but we want to get more precise with this candlestick over here, right? So you can see the market did test that candlestick really perfectly. We could be trading that, but for that, we still didn't have the confirmation such as break of a structure, just like Zach showed you, right? For driving price lower. So what we need to see? Well, we have a really nice visual reference that the market was selling off from this candlestick over here as well. Okay, because we came back into this candlestick, and then the market did create that aftermath, right? So what we are interested, well, we are interested in this candlestick over here for a potential sell-off, because the market did invest 2 candlestick worth of price movement to drive price all the way back down to potentially reach this level over here, which you can see we spike price lower and starting to move higher. So we have that sell to buy pressure. Okay, so you can see, right, if I play in a little bit, we can see that the market gave us a little bit more push to the downside, so we should be a little bit more patient, right? And you can see market came back up and it's gonna hit that perfectly level where we anticipated market movement, right? And you can now see the visual representation of market hitting the level, the 4-hour level, which is the daily as well, and the market then sell off. But in terms of stop loss placement, we were talking about that we could be potentially getting a better risk to reward trades. That's what we are after. We want to trade and we want to maximize the profits from a setup that is available for us. So if we would just have an entry from a daily, right, where is a reasonable area then to make a stop loss? Now, of course, the safest way would be on this high, because that's literally where the smart money should not come. But then, of course, the same way goes for this high over here. Reason for that is, it's because if the market is going to go above this high, then there's definitely, they're not interesting anymore into this short opportunity. Okay, so that allow us a little bit better risk, and of course a bigger reward. So now we came from 1 to 4, we came to 1 to 8, which is twice more, because we have, instead of 42 pips, we have 21 pip of stop loss with the same entry, but better placement on the stop loss. And that is, of course, then allowing us to have a perfect movement to the downside, right? And if I play that, you're going to see that the market then just awesome, continue to move drive price lower. And of course, we do need to be a bit patient to market develop that price movement. And here we go, right? And we hit that by daily candlestick, and the market is now reacting according to that. Okay, so with understanding the marketplace, where the banks are creating a potential reversal, and when the market is really putting money in, right, you're gonna see that you can then pin down where the banks are manipulating marketplace, where the banks went in, and that's how you can get your direction right. And if you're gonna trade, for, in my opinion, for every trader, let it be a scalper, let it be intraday, intra-week, swing positions, etc., I think the daily time frame is a king, right? So you can see that we draw down 2 levels from the daily, and we just drop down to the 4-hour, and we still had a perfect and really nice an opportunity to get really awesome trade out of that. And in my opinion, if you're really good and at asking yourself in the marketplace, where is the money, in terms of where the banks went in, you're gonna find out orders, right, concepts that are gonna prove time and time again that the market is respecting those candlesticks, because that's how the banks are moving the marketplace. And it's not just stopping on the forex market, it's go across all the commodities. It's literally respecting the same stuff throughout whatever we can trade. We're talking about soybeans, oil, metal, orange juice, stocks, right? Futures, whatever you want to trade. It is that mindset. I really hate the word strategy, because this is a mindset. This is approach into the market, which is a little bit different, and you definitely need to study it to really pin down and find a logical explanation for a certain movement in the marketplace, right? And of course, if you already have been on our Go Live sessions, you have a lot of stuff more in the markets that is telling you where to buy and where to sell, of course, but I'm not able to show you everything just over here in 20 minutes, right? So it's really awesome to show you guys some of the concepts and way of thinking, so then you can transform yourself to be really a self-sufficient trader, a really sniper in the marketplace, and you gonna be really, like, let's say, consistent trader if you really decide to be that, right? So with that, I'm gonna be ending over here, and I'm really proud on the person that I'm gonna bring up next, because the person that is gonna show you guys a little bit more in the marketplace, how she, yeah, I did say she, is teaching our people in our organization, and teaching people how to get in the marketplace on the lower time frames, and dealing with a lot of stuff in her personal life. That we're talking about a single mother of 2 kids, right, which recently just got puppy. You have to understand that that's determination on a whole nother level. And if she is capable to do all that and impacting lives through literally countries and countries on online. We have been together in London and people just love her approach and explanation. So guys, without further ado, I do represent Jana, a mother of TradeHouse over here. So Jana, there you go.
Thank you so much, Rock. I appreciate you. I love you all. I love everyone in TradeHouse. Rock, I've had some of my biggest breakthroughs from you. So I like my whole vision for this online event was to have us all collab, and so everybody could get breakthroughs from every, from every person educating, because we all approach the markets the same way, but one of us might explain something totally different and it gives a breakthrough for someone. And that was my whole goal. So I've had many breakthroughs from each and every one of you, and I just love you all. So thank you. That was amazing. Thank you everybody for jumping on. And thank you for your time. I will get to my chart and share my screen. Can you see my screen, Rock, if you just want to let me know?
Yeah, you're good. You're good.
Cool. Okay, guys, so I just want to start off with my 4 Ws. So my 4 Ws when analyzing the market from the top down. I'm going to do an in-depth top-down analysis for you guys. My 4 Ws is: where is the money? Where is smart money and drawdown? Smart money meaning the banks, the hedge funds, the market makers, the ones that actually move the market. Where are they in drawdown? What is their agenda on the high time frame bias / structure? And what is price doing now? So I will answer these as I go through, but I just wanted to put that up there. So with that being said, with my first W, where is the money, right? Really quickly going to touch on Wyckoff as well. I don't know if a lot of, depending, if you're brand new to these concepts, just be open-minded. Obviously this will all click if you choose to get started and learn to trade. This was all once foreign to everyone. So keep that in mind. For people that are already in the squad, you already know what I'm talking about when it comes to Wyckoff. So for those that can't identify it yet or haven't been able to the naked eye right now, what I'm looking at here, what I'm seeing here is the distribution schematic. We've got the buying climax, automatic reaction, secondary test. I personally would consider this the secondary test, as a whole. Together, we've also got obviously equal highs here, sign of weakness here. It might be a bit hard for a new person to identify this, but if you look closely, you can see we broke structure. So we've got our sign of weakness. So we are in distribution on the monthly time frame. So again, buying climax, automatic reaction, secondary test. I consider this whole thing secondary test, sign of weakness, UTAD. You could potentially even consider this the up thrust, as it's just come above this, but these are relatively equal highs. And you've got the up thrust after distribution right here. So just a quick schematic breakdown. With that being said, moving on from that. So where is the money? Let me get my toolbar. So where is the money? Right here. We got equal highs, right? And this is on the monthly time frame. It's the same thing on every time frame, guys. Literally every time frame. So we know the banks got in here. They took out liquidity and reversed the market, right? Personally, in my opinion, on top of this being in distribution, we personally are in a logical area to see the market reverse and target these lows. Like if we were to chuck a Fibonacci on here from the high to the low, we did react off a logical fib level as well. So just keeping that in mind as an overall higher time frame bias. So we've taken liquidity and you can see market reverse. So the first answer to my question based off the monthly time frame is where is the money? Right here, okay? So as I work down the time frames, I'm gonna get rid of this so it doesn't annoy me. So as I work down my time frames, I'm going to ask myself again, where is the money? So they've already taken it from here. So this is done. So I delete that and work my way down. I take off, oh no, I've lost my toolbar. There it is. I did that last time, put it up here. I delete what I don't need just to make it more clean. Okay, so asking those questions again, where is the money? So right here. So we know these are a target, okay? So where are they in drawdown? So we've got the last up candle before the down move, and we've got the last down candle prior to the up move. So all I've done here is mark out the last down candle opening in 50%. That's all I've done, just as a reference. Now, I'm not going to enter a trade off the weekly time frame. I'm not a bank or a hedge fund. I don't need to be in that much drawdown, no matter how confident I could be in a setup. So I'm just marking this out for visual reference to work my way down. So we've answered where's the money and where are they in drawdown. So we know they're in drawdown in this candlestick, and we know they're in drawdown in this candlestick, okay? So with that being said, still looking at structure on the higher time frame, we are technically still bullish. Obviously making this higher high and potentially this higher low. This is the weekly time frame, so I prefer to look at the daily just to gauge intraday analysis to play on the lower time frames, and we are actually still bullish on the daily. So with that being said, what I've just answered, I'll move down to the daily because there's more obviously price action and data here. Okay, so I'm going to get rid of all these just so we can have less lines. So as you can see, okay, where am I? All right, so we have the last up candle before the down move. So I just work my way down with price action, right? So what I'm doing now is answering my question, what is price doing now? Okay, that's the question I'm answering because I've already answered where's the money. I've already answered what is the higher time frame structure. I've already answered where are they in drawdown on both the monthly and the weekly, right? Now I'm asking what is price doing now, considering we're getting down to our intraday areas. So the daily time frame I'm on. So we've got the last up candle before the down move. Okay, so this area automatically has my interest. All right, so we can see that money got behind this move, right? They are currently in drawdown in this candlestick, and you can see we have been mitigating out towards the 50%, right? We have also created liquidity above. So I take note of that as well, considering why we are bullish on the daily time frame. Why are we bullish? We made this low, we made higher high and a higher low. We failed to make a lower low, so continue bearish, okay? So with that being said, moving down to the 4 hour. All right, where are we? So what's happening now? Now we can see more clearly where the liquidity is, where the money is, and we can analyze what price is doing now. So I've literally come from the monthly down to the 4 hour to the intraday timeframes, guys. So with that being said, where are they in drawdown? Here. So remember, I'm asking myself these questions as I work down the time frame. We've got the last up candle before the down move, right? They're also in drawdown here. I'm aware of that. And I've also marked out some imbalance and institutional candles on the smaller time frame just as a reference, okay? But we're working with what is price doing now, okay? That's where a lot of people get it wrong. Not so much wrong, that's probably the wrong word. A lot of people get stuck is because they identify points of interest which are valid, which have reference, but they're way away from where price is now. So that's why I'm always asking myself these 4 W's as I analyze the markets. So we've got the last up candle before the down move. So I've just marked out the opening and some imbalance on the smaller timeframes. We've also got liquidity resting above here. So that's a target. So not only do we have a target, we've got an institutional candle right above our target. Amazing. What are we on the daily? We're bullish. Great. Amazing again, right? So with that being said, on the 4 hour, if we look at structure, we did, I believe from memory, if I look really closely, I think we just broke it, just broke structure. So I personally will be waiting just for more price action to confirm, to obviously present a buy. However, if we look on the 1 hour, sorry, we can see this structure forming as well, this price action, I should say. So we've got the last up candle before the down move, and we're currently mitigating from this wick here. And if we were to break it down on the smaller time frame, you would see points of interest, right? But for the sake of just take my word for it at the moment. So we are mitigating from this institutional area, okay? So with that being said, why did we get this reaction? Well, we had our last up candle from the down move here. So we know that we're in drawdown here. But to give more reference and more precision, if we look at the 12-hour, you can see it a lot more clearly. We've got the last up candle before the down move, and it's come to the imbalance. So what is imbalance? Two areas of price action separated by one impulsive move. So you can see we're getting a reaction from there, okay? So hopefully this is making sense to everybody. Obviously, who's obviously already trading. So with that being said, we have targets, right? We've got targets here. Now I'm actually analyzing this live, guys. I'm not actually analyzing a past setup. So I'm not going to say press play and show you what happened and things like that. I'm actually analyzing the live market right now, even though it's closed, but up-to-date price action, I should say, and why things are occurring and what are we waiting for and things like that. Obviously, I don't know what's going to happen on Monday as far as market open and things like that, but just for reference, okay? So personally, I was looking for sells in this area. I was looking to sell it. I didn't have a limit, but this was my point of interest where I did want to sell it. So due to what I was seeing with price action, I didn't enter, okay? Purely because it just shot through my area. Obviously, looking at the 12-hour on the higher time frame, you can see the mitigation more clearly. Now, personally, I won't be looking to get into a sell unless I get structure breaks on the lower time frames, okay? So like the 4-hour and the 1-hour. Because remember, we are bullish on the daily, right? So that's just indicating to me looking for buys, okay? We have a higher time frame target. Sorry, we have a target above is what I was meant to say. And we are bullish on a higher time frame, right? So that's where my head's at with that. Now, if we start seeing structure breaks and nice price action, obviously I'm going to look at getting into sells. Why? Because we have so much liquidity to target below, okay? But we need to understand, we need to trade what we see, not what we want to see. So regardless that I have targets down here, price action and structure is not telling me to sell right now. It's not telling me sell. Okay, so I'm not going to do it just because there's a target down here, okay? I'm going to trade what I see and what the market's telling me, according obviously to my trading plan and things like that. So hopefully that's making sense to you guys. You can see here, where was the example? Let me find it. I don't know how I'm doing for time, but I feel like I talk really fast. Where was the mitigation? I think we're on the smaller time frame. Hold on. Where was it? Okay, this is what I want to show. So you can see here, right? We came into this imbalance. Sorry if that's wrong. I should put a different color. Make it a bit darker. Okay, we've got the last up candle before the down move. And how I said on the 1-hour, it was an institutional area. Okay, and that's what built this reaction. All right, so that's just an example of why it did where it did. Like Mike Miles always says, there's no coincidences in these markets. There's a reason why price is doing what it's doing. So just wanted to clarify why we got this reaction, because it might be hard for people to see on the 1-hour, you know, it didn't touch the opening, things like that. There's price action within this data as well that you can analyze, because it is the same thing on every time frame, guys. You've just got to train your eyes to see it. So that's what I wanted to go over for EG from the top down. I hope that made sense to you guys as far as what I'll be waiting for, what I'll be keeping an eye on and things like that. I did want to give a live up-to-date analysis on price action and what I'm anticipating for next week. Obviously, I have to wait and see what happens on market open. But yeah, that's about it from me, because I know the other guys were doing previous trades that played out. So I will now hand it over to Siva, who I have learned so much from, especially smaller time frame price action, like the 1 minute and 5 minute, which I'm always playing on. Most of you would know if you're on my weekly trade calls. It was thanks to Siva for that. So Siva, if you're there, I will hand it over to you, my friend.
What's up? What's up, everybody? Appreciate you, Jenna. I just want to start off by saying good morning, afternoon, and evening to each and every single one of you here. Right? We all know that time is the most valuable commodity that we have. And the fact that y'all are spending your time here, I appreciate each and every you for that. Now, I'm going to kind of go into a little bit of what Zach was mentioning in the beginning of the call as well, right? About time and price. Now, when we look at the Forex market, there's certain sessions throughout the market, right? Now, I am on the Eastern time frame, because y'all know I am from Canada, right? But if we look at the sessions, right, we understand that there's 4 different trading sessions throughout the day, right? We have the lunch session from 3 to 12, from 3 a.m. to 12 noon Eastern. From 8 a.m. to 5 p.m. Eastern, we have New York. And then, of course, we have Sydney and Tokyo session running from 5 up until the opening of London. So just like how we were talking about these certain concepts throughout these even daily time frames, we also want to understand that this same information, the same way you're going to look at the market on even a bigger time frame, right? And like how Jenna showed y'all, breaking this down, going even from a monthly time frame down into a smaller time frame. She even went down to the 5 minute. It's understanding that the market is fractal, right? The market is essentially doing the same things, right? But as you go down in these smaller time frames, even from a monthly to a weekly to a daily, you are just going to be experiencing more noise, right? There's just more on the chart, right? There's more information. But ideally, the best way I personally trained my eyes to start seeing the markets on the smaller time frame was through practice. No matter what we do or show you guys here today, and don't take this in the wrong way, but this isn't going to stick unless you put in the work and see it for yourself. Because at the end of the day, you can sit here and come to multiple different sessions, sit in our go lives, sit in our trading calls. But if you're not putting in the work yourself as an individual to actually take this information to the next level by implementing it, then there's no reason to just sit here and watch this. You're not going to learn unless you put in the work. So I really encourage each and every single one of you to obviously take notes, but take those notes and put it into the market, right? Take those concepts and start to see it over and over again. Because I'm going to tell you, each and every single one of us here that are presenting today, we have hours and hours and hours of backtesting behind our belt. Some of us much more than others. And it's really starting to understand that big factor of learning, of course, is the implementation. Okay, so what we're seeing on the screen here right now, I am on the 15-minute time frame. But like Rock was mentioning as well, this is showing the rest of the day's price action here, but the replay tool will print out that current daily candlestick as well. But when I was looking at this particular trade, when we were analyzing this live on our bounce back session, I was looking at higher targets, right? Because in this current point in the market where Euro USD was at, where Fiber was at, the market was bullish. We were creating those higher highs or lows throughout these time frames. And we can see we had some higher targets, right? Like Jenna mentioned, where is the money, right? Following the money is going to help you potentially see where the market can go, right? So we can see here on a daily time frame, right? We did have areas of equal lows down here, which have got taken out. And the way I look at it, there's two sides of the board, right? When the market is trading within this consolidation, right, even on this daily time frame, we can see that there's liquidity building on the bottom and the top side. Now, what does the market do? Well, the market goes for the downside first. So then now they're starting to wipe out all of these individuals, right? Individuals that are looking at this as a double bottom or a support, right? But then you have to think about it. If they took out the bottom side, where are they going, right? And as we can see, they are in this current structure that we're seeing here, ignoring this last candlestick. We can see that the market has been trading very quickly bullish to that top side. So now what I'm going to show y'all is an intraday setup that occurred in a certain part of the time of the day, but mainly understanding, right, that, you know, the two most important things on the graph in front of you is time and price. Price being your y-axis, time being your x-axis, right? For the ones that did pay attention in school, we know when you're looking at a chart, the x and y-axis has, you know, the most important information. This is giving you the variables you're looking at when you're reading this chart, right? So when I was looking at this, we could see even here previously, right? Once again, I'm in the Eastern time frame. We can see that during the Asian session, right? During that Sydney-Tokyo session, we were trading in a consolidation, right? And same thing as I was mentioning on the daily time frame, this is a very clear example of how these liquidity areas can be built up on even the smaller time frame through the intraday sessions. We can see that we had these equal highs and lows being created during Asian and then get taken out during the beginning of that London session to then continue to trade price higher. And as we can see here, where I was looking at, we can see that we have that last down candle prior to that up move. And we can see that this down candle here and this push up is what created our new high, right? And we can see that this high also took out some previous structure as well. And if y'all notice, it's almost a repetition of what happened over here. Once again, the image isn't going to be always the same. The picture isn't always going to be perfect. But it's really reading between the lines and seeing that the images that y'all are going to see in these markets are almost repeating themselves, right? But they're not going to be the exact same candle formation every single time. So if we see here, same thing. What do we start doing during that, what we call the pre-New York session? We start to trade within small consolidation, right? So now opinions are being formed, right? We can see there's money there, there's money there, right? And now where I was looking at, I'm just gonna actually delete that line there, right? The areas that I was looking to enter this position, right, was at that entry price of 111,700, put in my stop loss at 111,600, and targeting the level of 112,200, right? Whoops, changed the wrong number there. Give me 1 second. 111,700, profit level of 112,200, and stop level of 111,600. And we can see here, this is giving us a trade of 1 to 5. Now, me personally, once again, this is just my trading plan, right? all of us here, and especially y'all that are starting to develop the skill set, and the ones that have been obviously trading for a little while now, y'all understand how important a trading plan is. And for me, my personal trading plan, I only take a minimum personally of a 1 to 5 risk to reward. So this trade is meeting my criteria for a trade setup. So now we can wait and see here. I'm going to play out price action. And we're going to see that once we print these next few candles, you start to see that we're breaking out of that consolidation, right? We can see the same kind of thing here, right? It's almost like history is repeating itself. And I showed you guys on the daily. Now I'm showing you 2 examples of this happening on even the intraday time frame. And as y'all can see, this candlestick right here, we've poked right into that previous candle, and price started to attack the highs. So as we can see, the downside liquidity got taken out, and now we're targeting the top side. And remember, higher time frame bias is still bullish. So as we can see, price continues to trade higher, and as you can see, that take profit did get hit, right? But what I really want y'all to take in from this is that the market is very, very abundant. Okay, some of us might be more comfortable with swing trading. Some of us might be comfortable with position trading. Some of us might be comfortable with even intraday trading, or even, you know, trading on even the smaller time frames, like Jenna was mentioning, on the 1, 3, 5 minute time frames. But it's really understanding that as you put in more and more work into this market, it is going to teach you. Because at the end of the day, the market, in my opinion, is the best teacher. Because now you're analyzing this, and you can go back and reflect on your trades. Journaling, I highly suggest each and every single one of you haven't already, during your trading journey, to journal. And the reason why I'm telling you this is it's a good way of keeping track of your wins and your losses, right? Because the only way you're going to excel is by learning from your mistakes and turning them into lessons. Don't dwindle on the mistakes, right? Take those mistakes and help it move yourself forward, right? And the other thing that I really want to touch base on before I pass it off to the next speaker here is showing you guys the power of risk to reward and the power of consistent risk. At the end of the day, wins and losses don't matter. It's all about percentage and risk management. So this example I'm going to show y'all, right? This is just taking a hypothetical scenario. Let's say you take 10 trades in a month. Okay. Each and every single one of these trades, you're going to be risking 1% of your account. Okay. 1% per trade. And now I'm going to use the example of my personal risk to reward of 1 to 5. Right? So we can see here, right? You're going to be taking potentially 10 trades in the month, right? Hypothetical example, 1% per trade. And every time you're risking 1%, you're aiming for a 5% reward. So let's say you lost 7 trades. If you lost 7 trades, you of course lost 7%, right? We can do that math. And let's say you won 3 of them. Winning these 3 trades, of course, right? 3 times 5, we can see that was 15%. And what you gained from this month, right? Obviously, subtracting 15 by 7, you can see that you got a gain of 8%. And this was only with a 30% accuracy. Okay. So this, in my opinion, right, risk to reward is really what gets you in that point where you're able to compound, right? Because y'all can understand here, 8% during a month on, you know, if this were to be your monthly goal, we can understand that through compounding and through understanding that risk management, right, following that strict risk reward plan, even if you lose more than you win, you can still finish off on the positive side. Okay, so y'all can imagine, of course, as you can fondle around with these numbers, you can, you know, of course, reap a better reward, right? And shout out to Mike Miles for this, because this is all a numbers game, right? Numbers run a lot of things around the world, right? And at the end of the day, it's just you essentially calculating that probability, right? Defeating those odds. But I'm going to go ahead and pass it off to the next individual. And this individual that I'm going to bring up has not only provided multiple different breakthroughs for myself, but not only for myself, but impacted so many others around the world. His experience in the markets has helped me see the markets in the way he does, but not only that, he helped me develop my own eyes to see this market. And I'm happy to bring up the founder of TradeHouse Houston, my friend, my brother, and my mentor, John Fibonacci.
Thank you, sir. I appreciate that. And you know, you guys have been doing a really good job, and I really hope that everyone has gotten some nuggets so far. I really hope you guys are taking notes. There's been a lot of stuff that has been dropped, and I know we've been on call for a little while. I know some of you may be getting restless, so I'm going to talk here for maybe 2 to 3 minutes. So if you need to stand up and stretch or something, go ahead and do that now. All right. I'm going to share my screen real quick. All right. Y'all can see, right? All right. I'm hoping so. So like Siva said, my name is John Fibonacci. I have 6 years of trading experience. I have a Bloomberg certification, and I've been teaching for a few years now. So I started back in 2014, just like Zach. It's been an awesome journey, and I'm super excited to be here in front of about 800 of you from all over the world. You know, it's really amazing to see people come into the trading niche and not only learn to trade, but also to transform their lives through positive mental attitudes, learning healthy habits, and of course, learning the skill of trading and investing. The success of other people around me has always been one of the most important things to me. And to be able to be a part of this team, the TradeHouse family, is for sure one of the best highlights of my life and in the 26 years that I've been on this earth. So special thanks to the team and everyone who sent me their personal testimonials throughout our time together. It's the things like the success stories that allow myself to have the energy to stay up all night for an early morning training like what we're doing right now. Just like Zach said, time and price is one of the gems that I use in my personal trading. One of the other gems is knowing what the banks or the large institutions are potentially going to do next. Pretty much all of us have mentioned that already, right? That's the whole core to our strategy or trade plan, if you will, is trying to identify how the banks are going to move the price. And we want to align ourselves with that, okay? So knowing what the banks are potentially going to do, right? We also refer to as smart money, okay? That's what allows me to take trades in catching what we call the wick entries, or what would also be known as catching the high or low of the day, or the high of the low of the week or month, whatever it is that you're trading, okay? So we are going to recap really quick on NZD USD, and I'm going to show you a little bit on AJ. But first, okay, there is a couple of things that need to be addressed, okay? So everyone should know by now, if you haven't, okay, if you don't know this already, the markets have been around for well over 100 years, okay? And there's nobody in here that's 100 years old, all right? So that means the markets have been around longer than we've been alive. So there were obviously people who were trading the markets before you and I, okay? So there were people over time, okay, since the beginning of trading, who decided that this was going to be for them, that they were going to figure out the market no matter what it took. They literally dedicated their lives, 20, 30, 40 years. Larry Williams is going on 50 years right now, okay? So on my Instagram, I've listed out a few more names than what I'm mentioning here. Okay, these are what I like to call the pioneers of smart money. Okay, these are the people, like I said, who figured everything out. Okay, so they recorded what they were doing, and they tried to pass along the information from generation to generation. Okay, so here's a list. You can see it right here. Sam Seiden, W.D. Gann, of course, Larry Williams, Richard Wyckoff, that's who made the Wyckoff schematic, okay? Richard Dennis, Lawrence Connors, George Angel, Mark Douglas, okay? And there are plenty of more names, I promise, okay? I left out like Jake Bernstein. He helped with seasonality and stuff like that. But a lot of these guys were floor traders, or they worked for banks and institutions, or they just been trading for a really long time. So they just have that much experience to be able to know what's, they know their stuff. Okay. So we just had to adjust that really quick. And if you want to, I suggest you can Google these people. Okay. Every single one of these names is verifiable. I promise. All right. So now that we got that out of the way, Rock did a phenomenal job with Kiwi, okay, which is NZD USD. And the trade that he went over when, if you remember, he went into the daily, and then we broke it down to the 4-hour time frame. So that 4-hour time frame, okay, was called out on bounce back. All right. Now, I'm not sure exactly how many of us got into the trade, because we did put a little note on the 16th saying that it was canceled, but we would actually revisit it later on. So I don't know if that confused anybody, but either way it goes, the point is that we called the trade on I think it was the 15th or the 14th. Right? And then the 16th, we had canceled it initially and said, we'll come back at a later day. Okay. So the trade didn't trigger until the 20th. So we were 4 days in advance. Okay. Possibly 5. I'm not sure. I don't remember specifically, but just know that it was more than 3 to 4 days in advance. Okay. So we called out where it would be a good idea to look for a shorting opportunity. And like Rock said, with the markup, the market should not trade higher than that candle, right? And we posted a target for the short position down here. So, I mean, this is literally capturing the high of the week minus like what? 10 pips, okay? 10 pips off from the high of the week, and then getting out from 12 to 20, getting out 8 pips off the low of the week. Okay, guys, I don't know about you, but there are not very many organizations that can do stuff like this. Okay, that's just straight up honesty. All right, so that is the power of bounce back for you. All right, and one more trade that was mentioned on one of the bounce back streams was AJ. Now, we didn't necessarily give you the idea of a reversal, but a reversal still happened nonetheless, okay? So just like the previous educators had been talking about, we like to identify double bottoms, double tops, which can also be called equal highs, equal lows. Okay. So I firmly believe that the markets are heavily manipulated, like heavily, like seriously. Otherwise, 96% of traders wouldn't lose. Okay. So we know that retail traders look at a double bottom as support in the marketplace. So if they're under the impression that the market is going higher, okay, no matter where they got into the market, if they bought it up here, if they bought it down here, regardless of where people got in at, if we assume that the stop losses are just below the equal lows or equal highs for short positions, then there are a bunch of orders that are resting below the market. So it's going beyond the candlesticks, okay? So basically, when the market was getting close, right, to these equal lows, you can see how dramatic the market pushed through, right? It gave us an initial bounce at first, right? Because the market makers, banks, smart money, whatever you want to call them, they allowed traders to get in on this, thinking that it was a buying opportunity. So they had to let them get in and let them think that the market's going to reverse. And then they run it lower, right? So when you think about the stop losses, right, they could be resting just under the lows. They could be 10 pips under the lows, 15 pips under the lows. I mean, everyone's going to be different, right? Because there's millions upon millions of traders. So there's going to be orders all over the place. Okay. So they're not just going to go for a couple of traders. They're going to go for as many as they can. Okay. So who's going to be on the other side of that? Who's getting in when everyone else is getting out? It's going to be smart money, right? So when smart money is getting in, taking people out, right, they're shorting on the way lower. So if they want to mitigate or minimize their losses, right, they're going to exit their shorts on that last down candle, right? That is what we call a institutional candle because it's institutional movement. Okay, do you make that connection? So when price dips into this, we want to be a buyer. We're not buying the double bottom. We're not buying the triple or quad bottom, whatever you want to call it. And we could be buying near the low. You could be. But when you wait for a low to be established, your risk is predefined now once price comes back lower. Because just like Rock said, your entry would be at the beginning of the institutional candle, and your stop could either be at the bottom or like Zach said, just below a previous low. Okay. Now, me personally, I bump mine up a little bit to about 80% of that candle. Okay. And then you obviously can see that the market reversed from there. All right. Actually, quite heavily for the rest of the week. And where did it go to? Well, another set of equal highs. So NZD, right? We had shorted at the high of the week, got out at the low of the week. With AJ, there was an entry near the low of the week with an exit at the high of the week. No drawdown, straight. You get what I'm getting at, okay? It's pretty much going to be it. Everyone has been dropping fire info, guys, so I really hope that you have learned something from each and every one of us, okay? And that's pretty much going to cover it from my part. So thanks, guys, for being here. I appreciate you. I'm now going to pass it over to a very humble human being who loves to see others win just like I do. And he's going to drop some nuggets on how he got success, the success that he has today. So without further ado, I'm going to pass it along over to Shabazz, Chairman 50. the floor is yours.
Hey man, I really appreciate it, man. You done an amazing job explaining, just a small portion of how institutional trading works. And I just want to say, I appreciate every single speaker that was on this call, showing, the true way of trading and how trading is actually really done. I'm gonna quickly introduce myself, and I'm gonna be talking about just a bit about myself. My name is Shabazz Ahmed, 24 years old. I do hold the position of Chairman 50, but that's not what I'm here to talk about. I'm going to quickly talk about trading first of all before I get to my topic. I want you guys to ask yourself this question. Did you pay to jump on the Zoom call? Did you pay a penny? You see, the information you guys just got right now, you won't find that information anywhere. Yes, you can find that information somewhere, but it's very expensive, right? Because most people know the value of this information, and that's why they'll put a heavier price on because of the value. Now, you see, when I first heard of trading, this was back in roughly about, I believe it was 2017, or roughly about 2017. And you see, just for me to hear about Forex, just for me to hear about trading, just to hear about what apps to use for trading, I had to pay £150 just to hear what trading is, just to hear, this industry revenue is 6.6 trillion a day or whatever it is, just for that. And you guys just heard it. You guys got some crazy information that you won't find anywhere. So I want you guys don't realize, how lucky and blessed you guys are to get this type of information on your first day or your first month if you're already part of the company, or your first year. And you see, when I first started trading, it took me 2 years to find out what support and resistance line was, because I never got the mentorship, never got the guidance. And if you learn about support and resistance line your first day, like, imagine how lucky and blessed you should be, because imagine I had to blow so much money in those 2 years because I was gambling. I didn't know how to trade. So I found out what a support and resistance line was after 2 years. And it's all because of this company that taught me what this is, right? And you guys are so lucky and blessed to find this information, in your first exposure. So cool. Why would you want to get involved in this industry of trading and, network marketing? Why would you want to get involved? First of all, I got like a little graph that I want to show you guys. Let me just quickly share my screen. It is right here. There we go. Cool. Let me just quickly share. There we go. Wait, it's loaded. Now, why would you want to get involved in an industry like network marketing? Now, the best thing about Forex and network marketing, I know you just said network marketing, but I'm going to be talking about both. Now, why would you want to get involved in an industry like Forex and network marketing? And I'm going to be honest with you guys, I'm not saying jobs are bad. I never will talk down on jobs. At the end of the day, if it wasn't for the chefs behind the kitchen, we wouldn't be eating those fancy meals. If it wasn't for, the workers behind the fuel station, our cars wouldn't be fueled today. So I'm always so grateful for all the workers behind the shop, behind the grocery stores, because at the end of the day, these are the people that's feeding us. So if you're a part of Forex or network marketing, it doesn't mean you're higher than someone that's working in a 9-to-5 job, whether it's, it's because of them, you're who you are today as well, if you guys didn't realize that. Now, what's the difference between, a job and network marketing and Forex? Now, let's talk about a job. First of all, you have a boss, has a higher authority than you. Now ask yourself this question: when's the last time you have got promoted in your job? When's the last time you got promoted? Now, if you haven't got promoted, do you know anyone in your family that got promoted in their job? Now, if you don't know, and the real answer is this, right? Most people, won't get promoted after working for 3, 4, 5 years, right? I know people from this day, and they've been working in that same job for 5 years, 6 years, and never got a pay rise, never got a promotion. And you see, with trading, with network marketing, you see, you decide how much you want to make. You have no boss. You have no one telling you when you should go on a holiday. They won't. You have no one there holding you back from getting a pay rise. You see, you basically decide when you should get paid. You decide who you should work with, and you decide when you want to travel. You see, the amazing thing about being a business owner, being self-employed, is that you can go on a holiday whenever you want to. You can decide when you should work, and you can decide who you want to work with, and that's the best thing about it. You see all the speakers that you saw today. We have the choice of speak. We have the option to speak to each other if you want to or not. And you see, because we all like each other, that's why we're working together. You see, and you see, this is the reason why I'm, being a speaker for this call, because I love the TradeHouse, all the TradeHouse family. You guys are very positive. You guys are changing people's life around, and I'm about that life. If you're about changing people's life, I'm in that. Now, trading and network marketing, you basically can work from home. You see, I know pretty much everyone's in quarantine right now. Everyone's in lockdown right now. This information can teach you how to work from home, right? And I'm not saying you're gonna make all the money in the world. I'm gonna put a disclaimer: results are not typical in this industry. If you're willing to work and study, yes, you will get paid. It's like the gym. You see, I have 3 gym membership in the same gym, and I've been paying for the same gym membership for the past 3 years. And I'm still not big. I still don't have that bicep. I still don't have that 6-pack. And the only reason why is because I haven't been working out. I haven't been studying. I haven't been eating the right, amount of food. And that's the only reason why I'm not, big, all right? And it's same thing with this industry, same thing with trading, same thing with network marketing. If you're not willing to study, if you're not willing to study the TradeHouse, educators, if you're not willing to study Jenna, Rock, Jordan, and all these other guys in TradeHouse, if you're not willing to study, you won't have that type of knowledge. And the best thing about it is this, right? They have failed and failed and failed and failed. And now they're in a position where they can be changing people's life around. And you see, for you guys, it's more easy to learn now than before, because these guys got all the information that you really need right now. They've been through all the, mistakes, at the start. And now these leaders are going to be telling you, what mistakes to avoid. And that's the best thing about it. You see, it's like reading a book. Now, for example, there's a book called Think and Grow Rich. Napoleon Hill, he spent over 30 years to gain that experience, right? To gain that knowledge. And you see, I've read that book in 7 days. Now, I gained Napoleon Hill's experience in 7 days, and he spent 30 years to gain that knowledge. Isn't that crazy? That's the best thing about this mentorship. They spent years and years to study, and they've been go through a lot of mistakes, and you're only spending, 1 hour a day or 4 hours a week or whatever it is, and you're gaining a lot of their knowledge. And you see, you'll be having a better head start than they did when they first started, and that's a crazy thing. Now, that's so cool. As I said before, you decide when you should work. You have no boss, and you decide when to get promoted. Now, I'm gonna show you guys something. This information I'm gonna show you guys is very, very powerful, and this is something that can truly change people's life around if they utilize it properly. Now, at the end of the day, what's better than one stream of income? 2, right? Now, alongside with trading, you would want to have a secondary income, right? You would want to have a secondary income. The only reason why I'm saying that is because, as human beings, we make mistakes. Now, if you have lost, let's say you deposit £100 or $100, if you have lost that today, how would you get that money to reinvest back into your business? How would you get that money to reinvest back into your trading account? Would you want to work, go back to work for 60 whole hours just to get $100? Or would you want to look for a better way, a reasonable way to get that money? Now, I'm going to show you something that's so powerful. Now, I want you guys, before I show you this thing, I want you guys to take note of this. This is something that has changed my life around, and this information, I heard when I was 18 years old. And he said to me, Shabazz, do you want to get paid while you're sleeping? And I said, who wouldn't want to get paid while they're sleeping? And he said to me, Shabazz, if you want to get paid while you're sleeping, you have to be a part of the residual, you have to be a part of residual income. You have to be a part of the 5%. And this is something he explained to me. And he said to me, Shabazz, look, 95% of the world makes something called linear income. So I'm going to repeat that one more time. He said 95% of the world makes something called linear income. Now, I'm going to tell you what this is. A linear income is basically a job. The more hours you put in, the more you get paid. The less hours you put in, the less you'll get paid. And if you got, now let's say, you have lost your job right now, or maybe God has taken your life away, or the universe has taken your life away, would you still get paid? No, you won't. And what's crazy is that most divorces happen because of lack of money, right? Or, lack of time. And you see, when you have lost your job, and let's say, you have a partner or you have kids or whatever it is, you see your partner now has to look for a extra, another job just to provide for kids. And you see most men, they leave this world, without leaving something behind other than the memories. And you see, me personally, I'm that type of person, I always think ahead where I want to make sure, I don't have kids right now, but I want to make sure my future kids are, are good, are sorted, even when I leave this world. I want to make sure my future wife, is good, and she doesn't have to worry about money ever getting, if God takes my life away, if universe takes my life away. So I'm going to show you something that's very powerful. So 95% of the world, makes linear income. Now 5% of the world makes something called residual income. Now take a note of this. 5% of the world makes something called residual income. Now, what is residual income? It's something you do once and you get paid for the rest of your life until the day you die. Now, I'm gonna give you guys some example. Now, who knows Michael Jackson here? I'm pretty sure everyone knows Michael Jackson. Now, you see, when Michael Jackson died back in 2009, I believe it was July, he made over 150 plus million while he's dead. And how is he making that much money while he's dead and there's us alive? Like, what is he doing dead that we're not doing alive? How is he making 150 million while he's dead and there's us alive? It's because every time we listen to his songs, Billie Jean's, Smooth Criminal, wherever it is, he's getting paid. Every time you listen to his songs on Spotify or YouTube, he's getting paid. I listen to his song nearly every single day. He's getting paid for that. Of course, his family is not him, but that's residual income. Another way to make it is basically owning a property. You give it out for rent, you're making money on a monthly basis. But who has over 300K to invest? I don't. Well, at that time, right? No, I didn't have 300K to invest into a house to make, 1,500 pounds a month. I didn't have that. So I don't know about you guys. I can't be like Michael Jackson because I can't sing. I don't know about if you guys can sing. You being blessed. You utilize it. Sing your heart out, and if you do it with passion, you'll get paid for it. But me personally, I can't sing. And the other option was to write a book. Now, J.K. Rowling, the author of Harry Potter, she wrote one book of Harry Potter. She wrote that, she actually wrote the full story of Harry Potter on a napkin. And then she converted that napkin into a book. And that book sold over 50 million copies. Now, did she write that book 50 million times or once? Now, she wrote that book once and she sold over 50 million copies. And now she's a billionaire. Now, guys, ask yourself this question. Is she smart or she's so smart? She's really smart, right? Like, if she's getting paid for one book, every time you buy her book or watch her movies, she's getting paid. Now, who here wants to be a part of the 5%? I'm pretty sure every single person here wants to be a part of the 5% because that's where the money is, right? That's where the financial freedom is. And you see, the information I'm going to give you guys right now, I'm going to give a disclaimer quickly. Results are not typical. Again, you truly have to work for this. So I'm going to share my screen right now. Now, I'm just going to show you guys just this. Now, I'm pretty sure we have a lot of students in this call, a lot of college students or university students. I know a lot of you guys are studying. I'm trying to make this full slide. How do I make this full slide? I can't even see my screen. Okay, there we go. Oops, there we go. Okay, so I'm pretty sure like a lot of you guys are students. Now, check this out, guys. Now, let's talk about university right now. I know there's thousands and thousands of universities across all countries out there. Now, ask yourself this question: who actually makes the most money? The students who's making who's getting loans from university, or the person who so the person who actually owns the university? So who makes the most money? The student or the person who owns the university? The person who owns the university, right? And then you have to pay like £9,000 to enter the course, right, for the whole year. And then you have to pay for the textbook, the pens and papers, the printing. So the university is just a business, right? Now you see, what you're seeing right now is basically an online university. Now what we do, as a living is that we show people information that they don't want to see it anywhere else, and that information can truly change them and transform their life around if they choose it, if they want to, right? Now you see it here. Now we're actually building our own online university. Now who here wants to get paid like a university owner? You see, I'm pretty sure everyone wants to get paid like a university owner. You see, in this business, we actually get to own our own university, right? While you're learning how to trade, you can have a partnership in the company where you can bring in students into the company, into your university. Now you just started, right? You're learning how to trade, and now you have this partnership. Now you can finally bring people on board that can learn how to trade. Now, guess what, guys? Not only you getting paid for this, but you're also changing people's life, right? You see, the person who invited me down, my mom was going through depression. She's going through a lot of anxiety. I was like, I was knowing, I was not successful. I was very broke. I was broke. busted and disgusted, and you see the person who showed me this information is because of him who has changed my life, right? It's because of him. My mom's not in depression no more. It's because of him. Now, me and my family are traveling around the world together. And you see, you're also changing people's life around. And I truly believe, the more you give in this world, the more you get back. And I don't know about you guys, but, when I was a kid, my parents used to tell me, Shabazz, the more you give is the more you get back. And you see, in this business, the more you give back to the people, the more you will get paid. But if you're not willing to give back, you still can get paid. You can be selfish about the knowledge you have, but if you're going to be successful, you have to give. Now, check this out. You have now started your own university right now. You have a partnership in the company. Now, let's say you invite 3 individuals into the company, into university. Now you have 3 students in your database, who's learning how to trade, like the TradeHouse guys, right? Now they're watching the TradeHouse, educators, and now they're learning how to, trade institutional trading, smart money, and all that stuff. And now, now they're gaining a lot of knowledge. Now, because you invite 3 people onto the company, now the company pays you $150 every single month. You get paid $37 a week. Now, guys, you have 3 students in your university, right? And this is the best thing about it. They're learning how to trade, and let's say now, they want to make $150 a month alongside their trading. While they're learning how to trade, while they gain all the information, it obviously takes them a bit of time for them to make money because they're still learning. You see, me personally, I'm a type of person that loves learning. Don't get me wrong, I love learning, but I'd rather get paid at the same time. And you see, in this company, we can also learn and get paid at the same time, as long as we're willing to put the work in. So now you're planning on 150 with 3 students in your business. Now, let's say your 3 students in your business, let's say they bring in, 3 each. Now you have 12 students in your business, in your university. Now you're making $600 a month. You see, according to Forbes, if the average person just makes, $600 on top of their 9-to-5 income, they can live a okay life, a okay lifestyle. They can have an okay lifestyle. And that's not a great lifestyle, but what that basically means is that, the average person can at least pay for the bills without getting, strangled in the neck. Now they have more space to breathe. Now you can pay for your, your car fuel. Now you can pay for your groceries, if that makes sense. And that's how it is. So imagine funding your trading account every single month, $600, right? Now the next position after that is a Platinum 1000, where you can make $1,000 on a monthly basis. Now, once you have 30 students in your business, you're going to be making $1,000 a month. So imagine funding that every single month in your trading account, or maybe funding half of that and keeping the rest and spending on your parents, or maybe, I don't know, doing anything with it. What would 1,000 a month do for you? Imagine 1,000 on top of your 9-to-5 job. Imagine trading on top of your 9-to-5 job. You see, I'm not saying go full time on this. What I'm trying to say is that this is something alongside what you do. While you're studying, while you're working, that's something alongside what you do. You see, I'm not going to be showing anything more than that, because that's too much information. Because you guys got a lot of, you guys got a lot of power information, a lot of nuggets, and I don't want to bombard you guys with information. This is something that you'll find with the leaders that's on this call. So I want you guys to go back after in the incentive, after the Q&A. You can ask any of the TradeHouse guys, any of your questions, and they're going to be answering your questions. So this is a time where you take as much notes on your questions and drop it in the chat box.